Hi, welcome again to another edition of Market Analysis for today, Thursday, July 31st of 2025. I'm Gio Benacourt, and this is a recording done by Vantage Markets right about 50 minutes prior to the USA session open. Well, you know, markets are being driven by AI and not the Fed. So where can stocks go from here? Nobody likes a party pooper, but Fed Chair Jerome Powell is not trying to win a popularity contest. The central bank's job is to take away the punch bowl just as the festivities get going. And Powell is doing his best to be a killjoy, but it might not be possible in an AI-driven market. So the Fed chief struck a hawkish tone alongside the central bank's decision to keep interest rates steady Wednesday. He said it's still early days in assessing how tariffs will affect inflation and brushed off President Trump's pressure to lock in a September cut. So, with that being said, let's analyze what we can speculate to see in today's market fluctuation. So, in front of us, we have a daily candlestick chart. But let's finish out the month and let's take a look at the overall trend of the market. It is easy for us to identify that we are basically in an uptrend, right? We are basically in an uptrend. The market is making higher highs, higher lows consecutively. And here we use the bigger time frame to identify market direction. So we can obviously see that from this particular drop, market has started making higher new all-time highs in reality. So we are still in earnings season. So will this momentum continue to move higher? In that case, let's take a look at break it down. So we understand that the overall direction of the market has been for the last really 3 months, 4 months after this low in an uptrend. So looking at a daily candlestick chart, we want to see how much of that momentum is still strong. Well, we see that today we have actually opened gap up, and the Nasdaq is being closed by the New York by the London session, and is looking to continue to move higher, right? Looking to continue to move higher. So therefore, you can either come in and choose from this moment above. We have nothing to our left. There's nothing for us to historically say we found previous support levels, previous resistance levels. So everything is new, brand new, uh, you know, trend here, territory. So you want to use psychological values. So it jumps at you at 24,000. We're basically at that level. Basically at that level. So will we reach today 24,000? That will be our job as traders to come in and analyze the market to see if that will be the case. So therefore, we should use that as our level of resistance, psychological level of resistance. Okay. Let me just make that really round. So we have a psychological round value for resistance. Now, we can also come in and use our trend-based fib extension tool, and we want to use that by choosing the previous low, right? Then, since we already have that movement to the upside, we want to measure that movement, that high, and then the next higher low, which would be basically measuring the momentum. So we have the trend, we have basically a consolidation stage here, right? Market breaks out afterwards to the upside. So we want to come in and measure this particular So we want to also come in. I want to also come in and use my template. Let me see where's my template at. Hold on. Why can't I? Okay, it's not in here. All right. So visibility. Okay. So let's just add this labels in here. We should be able to see. No. Okay. All right. So let's just add those levels in our trend-based fig extension. So we want to be able to use. We can actually use the Fibonacci extension numbers, the 38.20% and the golden ratio, which sits right below our psychological value. So the reason that we want to use the Fibonacci is this number or this sequence is not man-made; it's man-discovered. So we actually everything comes towards that value. We see that in nature and architecture, in our bodies. Um, the midpoint from your belly button to your hair to your toes is actually 0.618%. So you can see that. So that's called the golden ratio. So everything goes towards it. So as the market momentum picks up again, our side, one thing is that the momentum is very high. We are in overbought territory. But that doesn't mean that just because we are in overbought territory, we will have a sell-off. We are in earning season, so and in another month. We still have tomorrow's deadline expiring about tariffs. So we could probably contemplate and look at the probabilities on our favor that the market will rally to the upside. Now, we heard what the Fed said yesterday, hawkish talk, setting up for a possible September cut, or maybe not still because of we don't know how tariffs will affect. So there's still things happening, but obviously the indices move accordingly to what the companies that are in the index report. So if we are in earnings season and companies continue to report profits, meeting expectations or beating expectations, then that will be just a catalyst for us to continue to, to expect that the market will continue to move higher. So we basically are at those levels. I used today's uh, high as a first level of resistance, but I'm actually going to move it up and use that that level that we have here on our Fibonacci extension tool. All right, so that's that. Now, if we want to be able to come in and take a look at support levels, well, you could use the same, right? How much of this are we going to retrace of this movement? So previous low to the high, and then we use the Fibonacci levels. So in technical analysis, the 0.382%, or in this case 38.20%, is what is used to find a level of support if we decide, or the market decide, or is showing that it has a strong momentum to the upside. So a strong or healthy rally usually will retrace or correct itself towards the 0.38% initially because it's a strong rally. Now, obviously, the golden ratio is where everything comes to, and if it happens to break or trade below that, continue to retrace deeper below the 38.20%, then we can expect the market could come down towards the 50 or the golden ratio. So that's how I use the Fibonacci tools available for us to come in and identify levels of support and resistance. So we have here our levels for support and resistance for the Nasdaq, right? So we can come in and take a look at other assets real quick and see how will that work out. Let's just do each one of them, like so. Okay, so golden ratio 38 20%. We have our resistance levels, then fib swing low to swing high, the 38 20% level, and then we have the 61% level. All right, then we have our levels of support and resistance for the S&P. Now, if you want to trade on a lower time frame, which will mean less risk, then you can come in. Where am I? Okay. You can come in and use a different time frame, shorter time frame. All right, so in this case, let's just add our lines here. I'm going to clone these lines, change the color of this one. All right, so we have here, so we have the Dow daily. The Dow actually, in this scenario, will we come and contemplate that the Dow will continue to move lower since it has been for the last 3 days, in contrast to the Nasdaq and the S&P 500, or will today be that particular day that the market would actually move higher? So taking a closer look at the chart, we can see that it has opened gap up because this candle closed on the low. So, and this one open here. It hasn't, I mean, it has been closed, that gap. The one obviously is where it opens, not not the swing low. It has been, it's open, gap up, it's been closed. Momentum to the upside was built. So here, if we were to use our tools, then we will have to measure is the momentum to the downside if that's going to continue, right? So here we can come in and use a different technique of identifying levels of support and resistance, which will be by looking to your left and looking at previous levels of support and resistances. So if the market is above a level of resistance, that turns into level of support. If the market is below a previous level of support, that turns into a level of resistance. So in this case, we're going to use yesterday's swing low, right, as a possible level of support. And then you can either use the 20-day moving average, which is the medium point of the Bollinger Bands, or you can come and look for psychological values at the same given time, looking to your left and see how many candles that particular level will cross. So in this particular case, around 44,500, it crosses 1, 2, 3, 4 to my left. So that will be a good level. So it's up to you. I'm just gonna use this yesterday's swing low and the 20-day moving average. As far as resistance goes, then 45,000 is a psychological strong value, so that should be applied, should be used. All right, I'm just gonna leave it and change. Then you can either come in and use the upper Bollinger Band. The upper Bollinger Band, or you can use the swing high. But I'm gonna use the upper Bollinger Band because the upper Bollinger Band. The reason that you want to use Bollinger Bands is it takes the default reading. It's 2 standard deviations from the medium point, from the 20-day moving average. I'm sorry. So I said in support, we're gonna be using the lower Bollinger Band for support. Sorry about that. So the medium is actually the 20-day moving average is actually right where the market is at. So we want to use that as a dynamic level of resistance or support in whichever case. All right, so we have that there. Then let's take a look at crude oil. So crude oil is on a tear. It's just continuously making higher highs, good momentum to the upside for crude oil. So we just clone this puppies, 3, 4. Now let's take a look at, let's change the colors, green to green. All right. So we here have 3 days, 3 consecutive days to the upside, higher highs, higher lows. We are in an uptrend. Okay. So therefore, let's come in and use our Fibonacci trend-based extension. And in this case, we're going to measure the whole movement because it's a strong move, right? So to the high, to the highest low. We can't use this one because this low is higher than this one. So we want to always use, basically, you want to use the low of the day that you're trading. So we have here our extension tool showing us where could the market continue to move higher towards. So let's use the Fibonacci values. That's why we're using it. And that's how we are able to identify that resistance level for crude oil for today. Okay, so we have that here. Now let's use the fifth retracement tool. And we're gonna also again measure the whole move. And here we're gonna come and find our levels. Fibonacci value, which basically where I had it, the golden ratio. There we go. We have our levels of support and resistance for today. Now again, you can change your time frame and use the tool to use that. I'm doing it on a daily basis. So if you're gonna be a day trader, that's how you will apply the tool. Again, let's clone our lines, change the color. And now we have here looking at Nat Gas. So the scenario for Nat Gas. So on the agreement or the trade agreement that Trump made with the EU is obviously for 750 billion of energy, and Nat Gas is the energy that the European Union needs. So they're gonna want that value cheaper. So can we contemplate to see Nat Gas even trading lower? So let's take a look at a monthly chart, right, and see how much lower. Where can we find level that the market will probably drop to? Initially, actually, looking at the medium being 2.7475, but also that medium is right above what we could probably call a double top, or a level where the market actually stopped a previous day and then opened and just dropped, even though you had a small fluctuation. But this level could probably be, this zone could probably be a level where the market could continue to drop towards and find that resistance. So in the monthly, we've seen that the market has already made that high and continues to move lower. So we can come in and say that the whole entire month of July was to the downside. So will this continue to the downside? And therefore, we want to be able to come in. And in this case, using the trend-based fifth extension, we're going to measure the previous high, right, to the next low, to the next higher high. So it will be this way. And we see that the market, remember when I told you that if the market was going to continue a trajectory, it should find that support at that initial level? Well, we are on a downtrend. So the market should have continued to move lower in that case. But let's just use our levels of Fibonacci levels to identify those levels of support on this movement to the downside. Okay. Now retracement. Okay. So in a retracement, rather than in a downtrend, rather than choosing starting from a low point to a high point, you want to start from a high point to a low point. So the retracement will be basically what the market has fluctuated towards. You see that? So here's what that will apply. That rule that if the market is going to continue to move lower, the market will come towards that 38.20% and then continue lower. That doesn't apply in the trend extension tool. It only applies on the retracement. We want to measure how, if the market is going to continue its trajectory right before it retraces, how much will it retrace to continue that previous trajectory or the previous trend. So we are in a downtrend, right? We are in a downtrend. So the market will come bound and see how much further back retrace towards before it continues. So as a strong momentum to the downside, we say that the market will come towards the 38.20% and then continues to move its trajectory lower. So that's what we've seen so far. So we're gonna be going towards selling today. Nat Gas, buying crude oil. Take a look at gold. So gold, it actually fluctuated lower yesterday below that 3,300 value, psychological value, and today it's finding that as a resistance. So this pressure on gold right now, obviously, to continue its trajectory to the upside. It's trying to obviously to recover all that it lost yesterday, and it was really due to obviously the Fed speak. Now tomorrow we're gonna have the non-farm payroll, and the consensus for that is about 110,000, 114,000. Let's take a look at what the consensus says here. So non-farm payrolls. So the consensus has it 110,000. So anything lower than that, that should cause obviously volatility to the market, or even higher than that. I mean, I do mean a lot more higher than that. So if we do see a lot more higher than that in non-farm payroll, meaning that jobs growth is still steady, so therefore it will put pressure on the Fed to cut rates. So if it doesn't cut rates, right, then we could probably see a slide on the indices, a rally on the dollar, because meaning that more interest rates is going to continue to stay longer for those who have investments in dollars and treasuries. So that's one thing that we want to keep in mind. Tomorrow is going to be a very volatile day. Tomorrow I'm going to be doing also a live webinar on that, how to trade that particular day. So let's take a look at where we can find those levels for support and resistance for gold in this case. So contracting our chart, we've seen that this particular levels of low, this swing low here, it could be a place. And we could also just use yesterday's swing low as a possible level of support, because the market rejected that level. So will it come and reject it twice again if it retraces, or will it continue to move higher? As far as resistance, well, the 50-day moving average is right above the market, and the market did come towards it, and it didn't really get to it. It was shy, but hey, that's a level of interest for me. So I'm going to use that as my first level of resistance, and then the 20-day moving average, or the medium of the Bollinger Bands, as my second. So if you want lower the risk, go into a lower time frame and see what's happening. Take a look at silver. Just add those lines so we can go and clone. So taking a look, this silver is actually doing a deeper retracement. So let's use the lower Bollinger Band as a possible level of support. All right, and then the next level. Look at this. All right, so we can actually come in and use the term fib extension tool. Okay, so obviously the 38-20% could be a place, but I'm just gonna use the so the golden ratio is right below the lower Bollinger Band. Let's just use that, and let's just use the levels that we see here. Okay, there we have them. All right, then retracement. So the 0.38% is already been the market was actually had actually opened up above it. So can we come in and use it? I mean, there's no reason to for us to come put a level of resistance within the body of a candle, and that shouldn't be applied. So we could come in and just basically use those Fibonacci values, the golden ratio, and then the next golden ratio, which also almost sits at there's almost confluence in this particular reading because the Fibonacci value is almost right at the 20-day moving average. So that's almost like a confluence. A confluence will be that they match perfectly, but futures can be beggars. So let's just use that. Then we have our levels of resistance and support for the day for today, and going with the trend, which is lower. Now, a dollar index could also have an impact on prices, as if it does rally, it will put pressure on them. If it drops, it will help. So that's something that we want to also keep in mind. Let's change our color. Red, red. All right. So we are in copper. So copper is actually do something here because I want to use copper advantage. Okay, I'm gonna use this one. There we go. Okay. All right, so we have copper. Wow, what a drop copper had yesterday. Because again, that particular scenario, it was a strong move to the downside. Wow. All right, so $4 jumps at me. Support. Will buyers be here around here? Most likely. See, if we use our trend-based tool to measure this strong move to the downside, see that particular value is there. I'm actually gonna just leave it there as is. Okay, I'm not gonna use the trend-based fib extension tool, and then another psychological value for 20 prior to that. As far as resistance goes, let's use the lower Bollinger Band, and then $5 psychologically. Let's see if that will be the case. Will copper recover and retrace all of this move to the downside? It should be. Copper is always a pretty good. It needed value. So Okay. So, all right. So let me use that. Taking a look at Bitcoin. So Bitcoin, will we see a continuation to the upside? One thing that I like to mention out or come in and speak about is the setup, how this chart, this daily chart is looking. So when I look at this chart and I see that we are basically having equal highs, equal lows, equal highs, equal lows. Basically, the market is in a tight channel, and the bodies are not so wide or so tall as this ones, like this ones. So this tells me right here we could be in a consolidation stage, and this setup, I call it a coffin of congestion. This setup right here, or this market, is a great setup for a possible breakout or a breakdown due to the effect that obviously or all of the appreciation that Bitcoin is taking place, is acceptance, everything that the law is coming around to it. I'm going to speculate that the probability of a breakout is on our side. So therefore, since we don't have really any big movements for us to come in and use the FIB tools, we want to use our common sense here and look for values like psychological round values like 116,000 as a possible level of support. Yesterday, the market did come towards it and it rejected it. So that's a strong level of support. The next level, 114,000. See, Bitcoin moves by thousands. So you want to give yourself a nice level. So 120,000, but also you want to look at how many candles will another level cross. So this candle, this line, this level, starting 1, 2, 3, 4. So let's use that, and then 122,000. Could that be the case? I mean, if it breaks out, it most likely will fluctuate towards 120,000. So why not? Let's just see. Now let's take a look at the currencies. Make sure that I'm in the. Yep. All right, so we have the euro. So them not cutting interest rates, which was basically priced in. We having obviously another scenario where the euro needs to obviously try to be more economical. Stronger dollars is what some say Trump wants. Then he changes his mind. So the trajectory of the euro, 115 was a level of strong psychological uh, support, but it was yesterday was broken after the hawkish tone of the Fed dollar spiked. So therefore, we're gonna use that now. Yesterday was a support. Today is gonna be a resistance, and then the second level, actually the first level of resistance today. Let's use today's swing high. As far as support goes, well, we can come in either contract or short and take a look at where some levels could be used. So actually, that this first level that shows is a level where volume cluster was created, so we can use that. And then the second level, 133 and a half. I always like using that particular level one by half. Psychological to me, psychological. All right, let's make sure that I'm in bandit. All right, then we have here the pound, which is getting pounded. Needed to say. So in this case, we do have a trend, which is downtrend. So let's use our Fibonacci tools to identify those levels of support and resistance. Oh, actually, I have them All right, so let's take a look at how we can come in and use our previous trend, move to low to the high. Okay, so using this, let's use the golden ratio and another Fibonacci value because the 38.2% is already being taken out. Market has already penetrated it, so we can't use that one. Now let's take a look at the favorite retracement. Okay, so market has already fluctuated at top, so let's just use the golden ratio and then basically yesterday's open. There we have our levels for the pound, and the trajectory or the trend is lower. Now let's take a look. Okay. So we see how the dollar index is just steadily higher. So 100 jumps at me. Okay. That's where it seems to be going towards. Strong momentum to the upside. I'm gonna do whole this. I'm just gonna use two levels. So we are in the dollar index. We are in an uptrend. Okay. We did open gap down. Okay, and it continue to move higher. We could probably come in and speculate that at some point we'll find some resistance at this level. But we come in and say, yeah, most likely the RSI is not even in the overbought territory. So we could come in and speculate that that will be the case for dollar index to come and find resistance at 100. Well, that's it for me today. We've seen how we identify levels of support and resistance. And tomorrow we're going to be doing the live trade the market movers, trade Fridays market movers, and we'll take a look at different scenarios, explaining more of the Fibonacci and a wave and applying all the techniques. All right, well, that's it for me today. Have a great trading day. I'll see you tomorrow.